Hey guys, what's up? Welcome back to another video. In this video, I'm going to be talking about one of the biggest companies in the world, and that company is Amazon. And we can see over the last year, Amazon is down 37%, while the rest of the market is down 10%. So they are underperforming the market over the 1-year chart. And so we're just going to look into some of the recent news that's come out surrounding Amazon, as well as their financial statements, and then we're going to figure out what the intrinsic value per share for their company is, so we can know if this is a good price to buy into the company from a value investing perspective. And so right here we can see they point out that one of the main competitors for Amazon at the moment is Walmart, particularly among wealthy online shoppers. And so they talk about here how in 2020, as a competitor, Amazon Prime, Walmart Plus basically launched, and it was really popular with high-income households as a way to fend off inflation. At $98 a year, it costs $41 less than Amazon Prime and offers a lot of the same perks like shipping discounts and video streaming. And in February, 28% of United States households with annual income of at least $150,000 were members of Walmart Plus, which is up from 13% year over year. Amazon Prime still held the commanding lead with 77% of households, up 7% year over year. But Walmart is obviously closing the gap on Amazon Prime, particularly here because of their main competitive advantage. They're cheaper and they offer some of the same benefits. And so right here we can see this is a cash flow statement for Amazon. We can see right here they're comparing 2020, 2021, and 2022. Operating cash flow in 2022 was $46.7 billion. And we can see that common stock repurchased. They didn't repurchase any common stock in 2020 or 2021, but in 2022, they repurchased around $6 billion worth of common stock. Looks like they're trying to return more value back to shareholders in 2022 in comparison to prior years. And so right here on page 37, we can see their income statement comparing 2020 to 2021 and 2022. Net sales are up. We can see starting from $386 billion in 2020 to $469 billion in 2021 to now $513 billion in 2022. So it's obviously a lot of revenue. But unfortunately, we can see if we scroll down here in terms of net income, in 2022, on $513 billion of revenue, Amazon actually lost $2.7 billion, unfortunately. And we can see that mainly came from this other expense line item here. They had other income in prior years, but $16.8 billion of expenses on their income statement for 2022. And that ended up eating into their bottom line, ending up with a $2.7 billion loss, down from $33 billion of net income year over year. And lastly, right here, we can see their balance sheet on page 39, comparing December 31st, 2021 to 2022. Total assets are up from $420 billion to $462 billion. And we can see most of their business is financed by liabilities. They only have $146 billion of equity, and of that, about $83 billion is in retained earnings, with the rest in additional paid-in capital, other comprehensive loss, and treasury stock. And so right here we can see this discounted cash flow model to figure out the intrinsic value per share for Amazon. Yahoo Finance is estimating that the company is going to grow at around 9% for the next 5 years. They had around $25 billion of free cash flow in their most recent full year, about $99 billion worth of debt on their balance sheet after subtracting their cash, and around 10 billion shares outstanding. That puts their intrinsic value per share estimated to be about $29 per share at the moment, a little under $30 per share. And so at the current share price of $100 per share, unfortunately, based on these estimated growth rates, they are not trading below intrinsic value at the moment. And so right here on the right hand side, I compared them to some of their competitors, mainly Walmart and Microsoft. We can see that in comparison, Amazon has basically middle of the pack, a gross profit margin. Microsoft has the highest at 68%. And we saw from their income statement that Amazon is not profitable. So that means they don't really have net profit margin, return on assets, or PE ratio. And the company also doesn't pay a dividend. So in comparison to their competitors here, they are not doing good in terms of financial ratios. Walmart is profitable, so that pretty much makes them better than Amazon from a financial ratio perspective. And Microsoft is definitely doing a lot better than these two companies here. And then lastly, I wanted to compare them to some of the companies we've looked at in prior videos. We saw that in terms of their current trading price to their estimated intrinsic value, they're basically trading at more than 3 times their current intrinsic value per share. And that means that they would be lying even lower than the 10th place spot, Microsoft, which was trading 1.74 times their intrinsic value. So they didn't make it onto this chart. GE, Albertsons, and Google are still the only 3 companies that are trading below intrinsic value per share. And pretty impressive that Google is, considering it's one of the biggest companies in the world and is a big tech company. In terms of growth rate, we saw that Amazon's growth rate is projected to be 9.44% for the next 5 years. And that puts them under Lockheed Martin, so they didn't make it onto this list either. GE still has the highest at 44%. In terms of gross profitability and net profitability, we saw that Amazon is not profitable, so they didn't make it onto the net profitability chart. But in terms of gross profitability, they came in the 9th place spot, right ahead of 3M and right behind Verizon, with a 43% gross profit margin. Adobe still has the highest at 89%, and Microsoft has the highest net profit at 36%. And then lastly, in terms of stock performance, Amazon's 5-year chart stock performance came out to be about 26%, or about 30%. So really not that good in comparison to the other companies we've looked at. Tesla at 700%, AMD at 600, Apple at 250, and Microsoft at 190. Netflix is at the bottom with 37% over the last 5 years. So we can see that based on this list, comparing them to the other companies we've studied here on this channel, that they're really not doing that good in terms of stock performance or profitability or growth rate or share price compared to intrinsic value per share. A lot of the other companies we've looked at in past videos are doing a lot better in those regards. We can also see that from competitor analysis, they're not doing that good in their industry either. They have a lot of revenue, but in terms of profitability ratios and dividend per share, they're not doing better than Walmart and Microsoft. So based on this analysis, it would seem like things are looking pretty gloomy for Amazon, especially considering the fact that their stock performance has not really returned that much value back to shareholders in recent years. And they have some pretty up-and-coming competition coming from Walmart and Walmart Plus, creeping on Amazon Prime's market share here. But I'm not 100% sure what to make of Amazon. Let me know in the comment section down below what you guys think of this company and of this stock. Is it a good buy at the current share price? Let me know what you guys think. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.